Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on XTKG. We love a 1-for-6 reverse split at 14 cents and believe that this will send the share price above $1.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. We are back here for another weekend stream, Dane. How's your week been?
It was all right. It was kind of a slower week than I was hoping, but not a ton of volume that I saw and stuff. But I did. I made the only money I made actually was on Alto. So there we go.
Oh yeah, nice. That's good. I'm gonna wait for it to set up once again, and I will make my money back. But meanwhile, we are very lucky, you know, because we have tickers like XTKG and all those sorts of tickers that yeah, we decided to go all in.
Yeah,
what are your thoughts on this?
Really looking forward to that share split.
Yeah,
it's done a lot for the stock.
At 14 cents, I think it will just skyrocket the share price and maintain it above $1 forever, probably.
Yeah, these like sham companies from China, it is just insane that they let these go and no one seems to care.
Yeah.
And it's like a shell company through the Cayman Islands. Like it just screams fraud in like every possible way.
Yeah, and I'm just going to switch over to the charts straight away here because this is how it looks like. And remember early in the year we had these kamikaze stocks. It's not exactly the same, but because in those one you could see that someone was buying up the stock in advance and just running the price up and then you know, take away the floor. But the drop was similar, and I actually found through my tiny bit of research, Dane, a pretty interesting group here. You have XTKG and then you have POM. If you pull up POM and watch, it's very similar.
Yeah, it's actually setting up POM.
And then you go CCHH.
Yeah, holy smoke.
I like this group, and I think yeah, all in here is the right play moving into 2026.
There's actually two beautiful setups on this too.
Which one, POM?
No, on CCHH.
Oh, before, yeah. I didn't even see that, but yeah.
The initial run is like a perfect wedge, and then
Yeah.
it moves up, it cups and handles to a sideways, jumps up, and then it actually, I guess there's actually 3.
This
You
looks
pull
a
around
bit
the
like
nosedive.
the kamikaze ones because you had the volume coming in here, and actually on the day before the drop, you had the biggest volume ever in the stock.
Yeah, that's well. See, and it's funny too. That biggest volume ever. That makes me wonder. Like, was someone trying to continue to pump it, and then they realized they couldn't, so they're like, "All right, this is the point where I
Just
can't seem
sold
to,
everything.
I can't seem to do anything, so I'm gonna get out tomorrow."
Yeah, and we know that we saw right on one of these tickers that the FBI got involved. So they have still not contacted us, but we are on this. We are on the trail here.
Yeah, just absolutely brutal for anybody who touched this.
Yeah. And POM, you were saying it's setting up again here now. Maybe time for an ad then.
Yeah, I mean it's probably the about as ugly of a setup as you can get, but yes, it looks like it's setting up.
Yeah.
I wouldn't look at this,
No.
but
No, very fascinating. We were just talking like throughout our stream time now, which is like 2 years or whatever it is. We have come across a few of these Chinese companies that just they don't they look very ugly on
Right.
all parameters, you know.
yeah, there's some of these things. It's just if you I mean if you're not doing any kind of analysis on anything, like I don't even know how these stocks appear on your screener. Like,
No, probably on forums, and I saw some guy was mentioning some WhatsApp groups and stuff when I did my research here. So I don't know. I think it's maybe they spread the word on some forums and people buy in, you know, and then they just decide to take away everything.
yeah, either that or you're straight up just screening by some kind of number or something, I guess.
Yeah.
And that pops on your screener, and you don't do any kind of due diligence besides that.
Or maybe they use laughing stock as a screen.
Yeah, that's going to help you in the long run.
That's the most plausible theory, I think.
Hang on, I'm just letting my dog out of here.
Yeah.
Oh.
So Dane, we started this week to post our daily watch lists. At least we're not going to promise that we do it every day, but it's something that we will try to do in the Discord server just to keep everyone updated a bit on like the daily things that we are looking at. Because at this moment, I think both of us are just we have stopped screening so much during the trading session. You know, we just focus on the daily watch list, which I love actually, because it makes you've done all the work in advance, and it makes you very focused on just one or two tickers for the day, which I think will help moving forward. But we started to post them, right? And I hope anyone else that are in the Discord also can see them and find some value there.
Yeah. Initially, a lot of times I wouldn't really. When I first started swing trading, I wasn't necessarily screening the night before. I mean, I was in ways, but not like where I'm making like a very set list of setups. It was more just on like on the day. I had a bunch of screeners I was using that were kind of live, and I did have success with that, but I do find like when I look back historically, if you really want to try and time some of the bigger moves, a good way to do it, because an easy way I found to screen initially was things that were breaking out to 52-week highs.
Yeah.
And then I would refer to the charts and stuff, but there's a lot of back and forth, and you're kind of praying that when you see something on that screener that you can catch it before, and you don't have a lot of time to like even pull up the chart and then kind of just check some simple numbers to make sure everything looks good before you go in. So just doing the pre-screen for me, it makes a lot of sense now. So it is nice that we'll be able to post that. So that's kind of why initially I had never even really thought to just kind of post my list, because I really didn't always have a list. I mean, we did when we were doing deep value and stuff, and you saw that on the stream.
Yeah.
But my deep value list could be, hundreds of stocks essentially, because it's just, if something changes and I've been looking at it, I might then try and take it.
Yeah,
But
you were not necessarily pressed on time on those.
yeah, nothing like, with swing trading, like where you're trying to get ready to pivot or something like that.
Yeah.
So, I mean, yeah, the nice thing is we'll be able to kind of always have you guys, if you want to refer back, you can look. I'll try and post it every day. Usually I post my market strength anyways, so I can kind of
Yeah.
just do both, because I kind of do all that at the same time anyways. And I hope it gives a little credence to, like, if you see it on my list, like those are the things I'm looking at. So, when I'm telling you I went into a stock, if it's on my list, there's a good chance that's the one I went into. Always
Yeah.
trying to be transparent on here.
And it's just also the idea if and we know like value and some other people also are connecting with us and talking about how they are looking into doing swing trading and also deep value stuff.
Right.
So it's just like for those people, and maybe people in the future sometime. I saw we got a new subscriber the other day also, so people are still coming in a little bit, and that those lists also function like maybe just like idea to check the tickers. I was checking through Dane's tickers, and I saw that we had some similar tickers in our daily watch list, and also he had a lot of tickers that I didn't have, so I just checked quickly through them, and decided if I want to keep them on my watch list or not. So it's just like to get an idea for tickers to look at as well. But of course, a lot of them will be removed that day if they break down, for example, or if they break out and you miss them. It's no point having them on the list anymore in the daily watch list,
Right.
So there will be a lot of changes on these, sometimes at least. This week has been a bit quiet. We had a half open day, I think, on Wednesday, and then Thursday, of course, was closed. And then on Friday, there was practically no volume coming in at all. It just seems like people are, like you said, closing the books and say they are happy for 2025 and wait to the new year starts.
Yeah. I know there's a few days left, so I mean, I don't know if when you end the quarter it has to be that, like, I don't know if firms consider the start of next year like next week or something like that, because it's part of next week. Because I would imagine if you're putting out like your filings and stuff, you do it somewhat in advance, but I don't know exactly what day it ends on or whatever you want to call it. So it doesn't really matter anyways. I mean, there's going to be what, 2.5 trading days next week before the year end. So I mean, it's not much.
Yeah.
But
so I guess it's going to be similar to this week, and it was a bit interesting to see, like, just the pure lack of things moving, which actually made some of the bases build further instead of breaking down or up, So I could be good also.
Yeah, and I mean, there's stuff that's kind of all over the place. So I actually, when I have, like, on my list right now, I have almost 40 stocks that look like they're setting up.
Yeah.
So I don't know if they look like they're setting up because there's no volume in the market and that's why everything looks consolidated, or if they're truly setting up as if they're going to break out. So I guess we'll have to see what happens here. But I mean, start of a new year. I think usually the second year in a presidential cycle is decent.
Yeah.
I think the third year is usually historically the best, but and I know that doesn't really mean much, but just trying to think of general macro concepts, and we'll have to see. We just never know each year. I mean, the more I look at it, like, the more the macro scene to me is just like, I mean, sure, on spur of the moment, you can kind of make like decisions on what's going to like how something's going to affect the market, but to make like any kind of long-term prediction on a macro environment, like, you're out of your mind.
Yeah.
Like, good
I
luck.
was reading I'm reading a book now, and it's about like market cycles and stuff like that. And the guy was like saying that I don't remember the exact years. I think he said like this will occur every 48 to 60 years or something. And it's like, what about those 12 years in between there? If you called it like 11 years wrong, or late or early, whatever, it's like, why does it matter to try to predict something when you have that time horizon, you know?
Well, I mean, the only thing I'll say is, assuming that you're betting on futures or something like that, there's people who invest that way. So that's why they're interested in it themselves. But I mean, when it comes to like futures and stuff like that, besides like you actually having a really good understanding of the news in a sector, like like people that followed, like we talked about like cocoa this year was like such a big
Yeah.
mover at times. If you know the cycle and how that whole farming industry works, you might have been able to better predict that was going to be a bad year in terms of the cost was going to go through the roof, which was going to push everything up. So I mean, you could maybe predict that way, but like and when it comes to like gold and like silver, just had like such a crazy move, and they're basically, people are saying, well, silver's been historically kind of like pushed down, and now you have all this inflation, which all these metals, it's not like the metals themselves lose value. So if we've inflated everything by 20-30%, like at some point that's got to break and those things have to go up. I mean, these things will move. Silver was up 10% in a day. I mean, that's a wild move.
Yeah. I saw there was a lot of people now talking about starting to track this for shorting.
Yeah, and I mean, maybe it comes down, but at the same time too, it's not like these minerals are getting easier to find, and it's not like these things, no matter what, it's not that like we used to have the gold standard where everything was like locked to it, but even without having that, gold still is a cost. It's still a commodity. And as you inflate the currency, if everyone's using the dollar essentially as like the measuring bar, all these things have to go up, because it's not like all of a sudden we just, like the gold market itself isn't changing all that much. It's just directly related, and everything's going to be a lagging indicator, because as the cost of money, gets more expensive essentially as we deflate or inflate our currency, like the cost of all these things is just going to keep going up.
Yeah, definitely been interesting to watch all these miners and gold and silver and other like rare earth, precious metal things move.
Yeah.
Especially in the second half of the year, I think, and it has just kept going, which is, I sold my SSRM too early, obviously, but I was tracking gold then, and it just did not stop. It just kept going, and all of those have performed really well. You can find a lot of low ADR stocks in those groups, but there are multiple options where the ADR is higher as well. So a lot of them have done exceptionally well this year.
Yeah. So the the end of the year here, like you said, it's hard to say what's going to happen next week.
Yeah.
And I don't really worry about it like that anymore. I'm just, as the week starts, I can kind of tell when a day opens up if everything on my list is kind of break even or down. Like, it's going to be hard to trade that day unless it really starts to turn around, and you'll know because everything will start to flip positive. But I mean, that's assuming you can keep an eye on it, because like I said, that's always an issue with me. So sometimes I just have to kind of step back from everything, and then when it comes to like a point where I can watch things, I kind of have to reacclimate myself, see how the day's been moving, and then start to see if I want to make a decision at that point still later in the day. which is rare because a lot of times, you know, if you've missed the initial move, but sometimes stuff, you also have it where like you get that morning pop and then everything pulls back, and sometimes you can get lucky if you catch it there. But yeah, I'm still working on updating my whole spreadsheet too. So like I said, I would like to start looking back into some deep value stocks.
Yeah,
Just because
there were a lot of things in my sheet. I last week, and I was speaking about like Y sheets. They made an update, and they actually removed my way to update my sheets. But I have figured out now how to do it with a new version, and I think the sheets that I have is back on track. So yeah, I agree. It would be. It's always. I think despite how it goes with swing trading, deep value is like always something I'm gonna check in on and keep a track on.
yeah, and my idea going forward would be, now that I feel much more comfortable reading charts and everything, I was going to set a screener up where I think the easiest way to do it is, you know, the stock will overall be in a downtrend, which I know this is all counterintuitive to what swing trading is, but you find something that's in a downtrend that's now moved upwards for the first time and done that first, you know, like kind of like what we all talk about. But these are, I'm gonna, you know, these could be well below 200 and 100-day averages. I might try and keep it to ones that are above at least the 50. That way, it would at least show in the most recent term there's some strength. So it's not like I'm totally bottom diving. It's kind of like just above that. So it'll eliminate, you know, a bunch of stuff that's just in that total downtrend that there's just nothing to see. But the idea would be to screen through those for setups. And then when it gets down to, you know, like, I don't know how many will pop up, you know, in a screener like that, where I'll be able to get through and find them. I'll obviously have to fine tune some stuff, but get into a mix of them and then pull those into my fundamentals and go through and look for stuff that has, you know, new or a possible explosive earnings, or like for instance, if you look at like the NUTX chart and stuff, when that first popped, like I would want to screen for stocks that have that first move. And then from there, like NUTX would have been obvious because there was a huge revenue and earnings surprise, which, you know, I mean, value said that that's what they were saying was going to happen. So then you could look back, see what management's saying, and then make a decision from there. And then, you know, it will give you a little bit more confidence to get in on one of these things.
Yeah.
So that's probably that's one of the things I think I want to start getting into next year is getting that built out. And then, yeah, just like you're showing on the chart there, I would, like I said, just be looking for stuff that's had that first initial move coming out of a really big downtrend.
Like Alto as well right now. This is like,
yeah, Alto would be a good example. Alto would be one that's you know, was just down for a long time, and yes, you'll miss that initial first move, which I guess this is like deep value 1.5 because I'm not trying to take it at when it's dead looking. I'm trying to take it right when it's, you know, made it out of death, and it's hopefully stair stepping its way back up.
Yeah, which has done already one time, but I also have NUTX on my daily watch list now, Dane.
You have, what was that?
NUTX.
Oh yeah, NUTX is on my list too.
Yeah. I preferred, like, it had a pretty strong day on Friday, which I preferred to be a little less strong and just keep moving sideways, because that ended up being a 5% move. But it can still move a little bit sideways, this one. The thing that I kind of liked on Friday too was NUTX actually got a decent amount of volume. And it's you know, yeah.
Yeah, it just looks like someone's still acquiring shares even at this price. But I mean, if you look at the PE and stuff, I mean, it's not often you're finding something with this kind of growth that just keeps performing. So yeah, and you know, when I look at that chart too, I agree. Yes, it had a strong day on Friday, but to me, for this setup to work, it's got to pull back a little bit, and it's going to keep moving in that triangle. You know, so it's going to take some time. But
Yeah.
this is just, I know we've used this stock like a million times, but it's just a good reference chart for like what you're looking for in deep value.
Yeah. And for swing trading also, like when you see, I'm gonna draw a little bit here now. When you see like these selling bars, that happens in almost all the setups that we're looking at, because it goes up, then it pulls back a little bit and starts to move sideways, right? So you're always gonna have these sell bars, and they come in on volume as well. But from there on, I just want the stock to move a little bit further away from those selling points, you know, and that's where we talked about those. Sometimes you can see these 3 waves of selling pattern in within a base, and then at the 3rd wave of selling, there's almost no volume on the selling anymore, and the candle starts to go tight. So preferably, that's something you can see here developing in NUTX, but I have to say though, there's a lot of setups that never get those wave patterns, and they still work amazing. So it's not something that needs to be in a setup, but you can kind of see now like 1 wave here, maybe 1 more here, and then if it continues, you get the 3rd one, and there's no sellers left, and then hopefully can break out from there.
Right. So it's just that's my goal, is to get organized where I can start having a separate screen for those names. And I'm not going to take those right away. I would probably watch them for a few months and, you know, start to see how does that list perform? Am I able to truly find stuff that's coming out of the bottom and then having a long run up? Because you know, I was rereading something, and I think it was from Vinny, and he was just saying that, you know, a lot of stocks, he's using this as why you should buy at the top, because when a stock's at like, you know, 30 to 40 PE, he was just saying how useless that number is. And I kind of agree. Like PE is like a really, really kind of a dumb measurement of most things. It's just, it's assuming I'm backwards news always. So I find the PE ratio pretty useless. But, you know, a lot of things are at 30 to 40 PE before they have their explosive growth, you know? So at that number, I mean, 30 to 40 PE, I mean, that makes something sound stupidly expensive anyways. And then from there, it just goes up parabolically. So kind of bringing it all the way back to when you're at the bottom, I mean, don't get me wrong, I'm not looking for something with like negative PE per se. Like I don't want it, like I want that number to be positive. It could be, but the idea being that, you know, when something's low and I miss that first like 5 or 6 jump in like a PE because I missed that first move, I don't really care, because the goal would be to catch it the next time where it's going from, you know, a PE 5 to 20 or whatever it is. You know my point being? Like NUTX, what's its PE right now?
I don't have it here, but let's check Yahoo. 862 it says on Yahoo.
Right. So it's still low, you know, and you know, earnings per share is $20 right now. I mean, I know it's $180, but like how often do you see a stock that's 180 with $20 in earnings per share? It's still high. So basically, if this just keeps continuing to perform and they keep working on things, you know, the stock's going to go up. They're probably going to do a split at some point to bring that cost of the stock back down in a good way.
If you zoom out a little bit also, then it can be a gigantic cup and handle right here, where it is right now.
Sure.
So
it's a little,
you do the weekly one, you can see it a bit more clear, but it just looks good. It looks very good on the weekly, like all of the setups here.
Yeah, but and I agree. If you look at that weekly setup there, we just need a little bit more
here,
of a sideways movement here.
Yeah. But let's see. It's a couple of weird weeks now with half days and low volume, end of year, all that stuff. So I prefer, if this can not break out until like a proper full week or something in January, this will be very interesting.
Yeah. So we'll see.
Yeah.
But that's what I'm working on, getting that going, and if we have some slow weeks coming up, it's a good time to just kind of get all this stuff organized,
Yeah.
and so we'll see.
I just pulled up USEG now. They seem to go the wrong way here, Dane, in terms of the thesis. It kind of broke that 110 floor that it had, and just kept going below. Yeah, I don't know. I don't know about USEG anymore.
Yeah, like I said, ever since everything's kind of it's kind of failed to do what I was hoping it would do. So from there, I'm holding them. I'm not super interested at this point.
Yeah. But another stock that offer like multiple setups up here. So always going to be in the back of the mind to check in on not USEG, because
Morning, hon.
everyone talks about also personalities of stocks and how they have proved themselves in the past. So just something to keep in mind.
Yeah, and I've totally changed my opinion. I used to think, from such a fundamental perspective that, what really moves a stock in the long run is the fundamentals themselves. And that holds true in really longer periods of time, mostly. But at the same time, too, what moves a stock is people buying it.
Yeah, it's
And
the momentum. It's the interest, and that comes from fundamentals being great and all that stuff. And the best scenario is perhaps when a company can surprise everyone and,
right.
and catch people off guard. That's when you see the big moves continue,
Well, and like USEG's a good example because, until they really prove these drills are going to work, like they're totally changing industries. So there's a lot of skepticism on that. And,
Yeah.
Narratively, you can buy into it early and, you take the risk of, possibly getting screwed at some point because they don't perform like they say they will.
Yeah.
And, you would think optimistically, like, USEG's a good example because if there's institutional buying coming into USEG, this should at least be kind of holding. It shouldn't be breaking down. Like institutions don't like to, lose on their buys. So if anyone was buying USEG, as we start to approach the good news area, what this stock should really be doing at bare minimum is going sideways. And the fact that it continues to work its way down means there's no institutions holding this thing, or
Yeah,
very few. And if anything, they're probably selling out of these positions.
And I assume below the $1 mark now also it's like a lot of rules kick in for the smaller funds as well, so they can't buy it anymore, I guess.
Right. So they have to, so there's just a lot of things here that are making this tough. So,
but also a great example of something that can catch people off guard and outperform in one single report or news.
right.
If there comes some positive news about the transition has gone well and the outlook is very promising or something, you can try this as a EP move, as a swing trader, but most likely that's going to be a bit hard maybe for a lot of people. So, but then you will get time because it will, like you said, it will continue to move up and sideways at some point. And just track it and try to take it on the next one.
Yeah, that's a good point. Because most likely, if there is any kind of good news that finally comes out, or finally in earnings, like this is going to gap up, just because.
Yeah.
I mean, you can
I
look
don't
even
know.
when oil would have like possibly good news, this stock just skyrocketed, and it didn't
I
take a
mean,
ton of volume to push it to like super, high amounts.
then
So
when we were in it the first time, it had its highest buying volume ever, and that was 110 million. So it just proves that people come to this stock when there's something positive.
yeah, well, and it also shows that like liquidity is kind of, I mean, not tight per se, but there's just not a ton of holders. So once it gets to where there's good news on something like this, if you get a bunch of interest in something, even retail itself can push this really high.
Yeah.
So
I just checked the short interest for fun. It's low, but it is at 5.55%. So it's not nothing. That will also matter in a move like we are talking about.
yeah, because if there's any kind of gap, that whole 5% has to cover immediately. So
Yeah.
that's immediately a 5%, buy essentially
Yeah.
all at the same time too. So yeah, that's a good point, just because all that stuff matters.
Yeah.
But USEG would be an interesting one because, like I said, this wouldn't necessarily be on my deep value radar until it has that first move, and then from
Yeah.
there, makes me watch it. So
Exactly.
that's just kind of the goal.
And then you can actually play it in two different styles. You can keep a position for long term and also swing trade it.
Right.
So you can do
Um,
both on these ones. So that would be like the perfect scenario.
yeah. Right. So
I saw a group that was a little bit up and down this past week. I think it is aerospace and defense. Dane, there was some big moves here and a lot of volume coming in the last period.
mhm.
Rocket Lab. There's nothing right now on it in terms of what I see. It needs to build a clear setup. But you have a lot of volume coming into this area right now, and ISSC looks perhaps the best for me if it can build a setup that you like here. Did you see this? I posted a few pictures about this group in the Discord channel.
No, but that's and what was it? What's going on with this?
Sorry,
And what's going on with this one?
it's just like the entire group. It got a heavy volume in the last 2 weeks or something, and a couple of them was up 100% in a day and stuff like that. It's like heavy
Yeah, I mean,
interest in.
see, the problem is these ones is like I'll screen and this will be on the screener, but I won't even look into them because there's no setup yet. You know what I mean?
Yeah, exactly. There's no setup. So this is on my list that I'm just picking stocks from into the daily list because I like the move ahead,
Yeah.
and especially ISSC I think looks very, very strong, and they delivered on some earnings now, and on my chart at least the ant showed up, which just indicates heavy institutional buying. You can see it here on the volume as well. So it's very extended right now, so it needs to slow down a little bit and go sideways. But I just saw that there's so much money coming into this space recently, so it just caught my eye a bit.
So on that, you like how you have all those little you call them ants or dots or whatever that
Yeah,
start.
yeah,
When those, like, if you go to right where they first start,
here.
that's signaling that institutions are buying.
Yeah, but they don't show up that day. It shows up after.
Gotcha.
Because I don't know the calculations now, Dane, but there is some percentage compared to the average volume and stuff like that. So and it needs to do it for 12 out of 15 days or something like that, and then they show up.
Gotcha. Okay.
So this is just something I like that shows up. It would be perfect if they show up after you get into a stock, because that just means that the price will go up. But it's something that I like that shows up ahead of a set, because then
Yeah.
these people are in it, And if there's no selling in the base, they are still in it, and they keep you are aligning yourself with these big funds, then
Yeah, because there is an interesting setup there, just in terms of the. I mean, there is a setup there off the bottom after that first move, so you
Here?
could have gotten on that. But
Yeah.
like I said, just take this would be a good example of one that, like, normally I wouldn't be looking in, because this is like in that general downtrend. But after that first move, yeah, right there, that's a sideways move right there, where you could see that pretty clean cup and handle, and from there it's just kind of straight up.
Yeah. And
So yeah,
it gapped up on this one. This is interesting though, because it gapped up on this one above the 200-day moving average, and it pulled back, and then just the next days it just couldn't, and then the earnings came. That's what propelled this up, the earnings report here.
but that's what I'm saying. Like, even if you just look at that in general, though, that gap up there, I mean, I know it's tough to kind of get in there, but it should at least throw like a flag.
Yeah. No, so I saw yeah, Rocket Lab has a lot of volume. This one I think doubled in a day. Yeah, here, biggest up volume ever on this day here. What did it end on? 97%, Dane.
Yeah, it's ridiculous.
So
That's what I'm saying. You catch too many of those to make
no.
your year.
It's just, well, we could one this year, right? One per year maybe.
Yeah, I know that's the thing, is you don't need to catch many and you can outperform.
Yeah. I was also looking at these engineering and constructions. They looked very similar, and they got a lot of volume. I went back and checked the entire group, and that day we were talking about last weekend, that looked very good on the indexes, like the Nasdaq, and it had that day with high volume. Remember?
Mm-hmm.
So that same day, there was a lot of volume coming into this group here, engineering and construction. So I just found that a little bit interesting, that maybe someone has targeted this group or something,
Yeah, well, I mean, that's the thing. When you're looking at sectors, you can start to kind of see, as these things start to move up, it starts to throw names at you, and those names are being bought. It's how it works. It has to work.
Yeah. Because a lot of them had like this big, bar on the volume on the 19th of December, which was that day, and and they look similar. So I just like them, because I think they are building a kind of like a big base here now. They look good on the weekly. If you go to FIX fix and check the weekly chart, that looks pretty good right now.
Yeah. No, and I mean, when you like you said, when you can see like the overlays from like weekly to daily, that gives good credence to any of these kind of things.
Yeah, and this is not extended from before. A bit low in ADR, not low, but it's 4.19. PRIM has a little bit more at 412, but they move very similar, and they get really tight here now. But like we said, the last 2 days, they are a bit hard to get anything out from, because of the unusual low volume and the half open day and stuff like that. So
yeah, I'm just curious. If last week I had a bunch of stuff come up, so I didn't get to watch either like I wanted to. So I'm hoping going forward, I'll have a few good weeks where I can actually keep an eye on things. So
yeah,
it's always easier said than done, but we'll see.
it's not easy. I think I said this on another stream, but Kulamagi said like he could never do this with kids,
Yeah, well, and what do you call it? It was cool that you posted that video of him when he was younger, and he was talking about how important it was for him, because when he learned as a day trader, and he was saying how important it was to be able to really take as many positions as possible, because I guess his initial broker like limited how many trades he could do or something. Either that or his account was small enough that he didn't have enough. Because I think you have to have over 25,000 in account in most of the U.S. Brokers to be able to day trade, because they won't give you your money back until the trade settles if you don't. So
Yeah.
I think if you're under 25,000, you can't just keep trading and trading and trading. Which puts a big limit on you if you're under that amount.
Yeah.
But I mean, it's not like I'm trading. I'm not trying to trade that much. That's just not me. Even though, like I said, I've been kind of day trading in terms of like, I tend to sell at a breakdown during the day and or at the end of day. I'm not like purposely trying to like scalp like pennies here and there.
Yeah.
But yeah, I mean, I'm just looking through your list now. A lot of these are ones that I have.
Yeah, I am the most excited about the top ones here, and also POWL made back into my list now. POWL. I think it looks interesting here. A little bit messy.
Yeah, it's a little choppy, but that last, I would shorten that bottom candle a little bit, or that bottom line, just to the more recent move. But
yeah, no, I don't care about the bottom line. Actually, it's just the top line here, so it's like from there then.
yeah, no,
Yeah.
I'm just saying like
Yeah.
it looks cleaner from that. Like you can have it go farther back, but
Yeah.
but yeah, we'll see. It's just hard to say where things are going here, but it does look like it's a okay setup.
Yeah. And this one, it's like a cup and handle, right? But maybe try to break out here. But that was the half day, and yeah, I just these last 2 days confused me a bit in terms of how you should interpret it into the setups.
Well, I mean, it looks like a cup and handle, except the handle's forming that like wedge formation. So it's almost like a flag with it. And, they always talk about like the fractals of the fact that you want to see. I mean, just look at the last move it had when it pulled out of its base. It pulled up, and the cup and handle is actually like its own little cup and handle again.
Yeah. And also here came the ants again, so, and I don't see much selling after. So to me, that just indicates that you have the backing of all that institutional buying, still, and that they believe this will go higher.
Well, not that they believe it, but they want to keep adding to their position. So, because like I said, that's the thing is like when you see an institution buying, it's not that they're necessarily trying to get to a certain point. They're just trying to get a position. Like, you know what I mean? Like they just want a position. So if they have to put in and the price has to get pushed up because they're trying to take their position, it just is what it is.
And look here also on Friday, 14th of November. That is after earnings. It's not like the day after earnings. It's a couple of days after earnings, and just it just rests on the 50-day, and then boom, it goes up again. I don't know, probably some news, but I assume just like these people are buying here again.
Yeah, I think it's just the liquidity dries up there, because if you even look at the very bottom, it looks like there's a really tiny cup and handle.
Oh yeah.
So, as it breaks out of that spot, you just kind of keep seeing that pattern over and over again as this continues to work its way up. And it looks like we're honestly to the next one, like you said.
Yeah. And it's interesting also in my project, on the stocks. I'm now in 1983. And it's like, it's just the same. it's exactly the same pattern that I see, the same things to track. And I've also like started to think, because I it's a bit hard to track in terms of numbers how the overall environment was. So I'm gonna just add that as a comment in my spreadsheet to get some context, because context matters a lot, right? When you have stocks that double in a year, and maybe some years I've found very few so far, so why did exactly those start to move? And then you need to understand the context. I think that's very important also moving forward to eliminate a lot of random trades, I think.
Yeah, no, all of it adds up. And I used to think you don't want to have your like screeners too tight that you're missing names, but you also don't just want like garbage getting thrown in at you because it just makes you look at things that it's kind of a waste of your time. So I think having the mix of the criteria and then being able to kind of like the real nuance comes from once you've done your screener, let's say it throws you 50 names or something like that. The real nuance is being able to go through those 50 names and narrow it down to like a few and kind of know the background stories and just what looks most likely like things are moving in.
Yeah.
And like you said, when you kind of overlay all these ideas, like you're looking at strong sectors, you're looking at stuff with surprise earnings and revenues, you're looking at good setups, you're looking at things that look like institutions are coming into it, or narrative changes and things. If you stack those together and you just have a decent system in terms of buying and selling, it's kind of hard not to make this work. And I'm not saying that's easy, but if you can line those things up, everything will start to pan out. I mean,
I think
and honestly, I think you doing the history thing, if I had the time to do that, I would love to go through and look at it like that because I just think there's so much you can pull from that. And I think looking at only stocks that have done well for, a 50-year time period is going to just blind that into your head so much that it's going to be hard to not like see a chart and kind of know where it's at.
Yeah, no, I agree. And obviously it's why I do it. But it's also very interesting, like I said, to get a, because ChatGPT, I haven't been able to back check everything, of course, but I did some of it and it was accurate. So I decided I want to just trust it. And the kind of overview ChatGPT gives you in what happened that year in terms of market moves is very interesting to see then, because it even mentioned in one of the things, it mentioned like these two or three companies did really well in this year, and those were on my list already,
Mm-hmm.
So it was like it was in sync. So it's just interesting to see how things repeat. And also then, like you said, you will start to know what to look for, and maybe more importantly, know what to filter out that still looks good, but you don't want to touch it.
Yeah. And then kind of, I think part of my cheat of doing all this is once I have my list too, on that day where stuff starts to move, and this is from how initially I found my strategy to work was, I was just finding stuff that was moving on those days that was up a certain amount. And, you do want to get as close into the pivot point as possible. But if you have all these things going and your list is knocked down to just like the few things that we're talking about, and something's up, at the start of the day by, 4 or 5%, whatever, something like that, and there's like a decent amount of volume coming in, like that just throws like immediate flags to me, like this is a possible winner for the day.
Yeah.
And there's very few even on my list of, if I have like 30 to 40 names or whatever, there's going to be maybe like 2 stocks usually on a day that pop up that look like that.
Yeah.
And the only other exception to that is some like what if it's a really strong day, there might be a bunch of things up like that. And on those days, you can probably take almost any one of them. I mean, still usually the strongest ones right off the rip are the best ones.
Ulamagi said like 2020 was the easiest year he has ever made, and he made so much money that year. And that's probably because of what you just said. Like it was hard to miss when you know what to look for, which he obviously did,
Right. Yeah. And I mean, in those years too, it just makes it easier. I mean, that's the thing in terms of like market timing, and why everyone always says it's so important to just kind of analyze the market strength in general. But in those huge up periods, there's just so much money that you can't really go wrong picking a lot of these things. Now, I mean, that can make you a little too bullish, and that can hurt you once you get out of that market, especially if that's what you started in. which, you know, that's where I initially started, but I didn't know what I was doing back then, and I wasn't really I wasn't trading by any means.
Yeah.
Because initially, when I first, you know, what first interested me about the stock market was value, like immediately. Like when I heard the idea of value, it just made sense to me, and I was like, oh yeah, you gotta look at it like this, which set me down that rabbit hole.
Yeah.
And that's what led me into RK. So I was
Yeah.
just looking for random stuff and found him.
Yeah.
Um,
Thank
but
God.
yeah, the rest is history.
Yeah. I think what you said earlier though, it was funny because yesterday I read so I do so much in a day that I don't remember where I read things and stuff like that, but it was online somewhere. But there was a guy who said like you should try to stack all the odds in your favor, obviously. But then he said like if you start to filter, if you make a list and you're happy with all the stocks on your list, then you start to filter, like you said, check the fundamentals, because that gives you a fundamental edge then. And then,
Yeah.
okay, maybe you filter out one or two because another stock in the same group or whatever has better fundamentals. So then, okay, then you get a fundamental edge. Then you look at the technicals and go really into the detail, the nuances, and look at the candles and the history, and if the move is linear and clean and all that stuff, then you have a technical edge, and you know, and so on. And putting it all together, you're most likely going to find the winner of the group, and just focus on that then. And if it fails, okay, then you at least try to. It made sense what you were doing. It wasn't like, because a lot of things also fail. You have to understand, right?
Yeah.
It can look very good and still fail.
Yeah, it doesn't matter. I mean, the setups don't work because they're you know, when they set up, they work when they work.
Yeah.
Which is, you know, I mean, that's we were talking about buying pullbacks. I mean, you know, just if a setup was great and there, you know, there's a pullback. Like, yeah, it seems like you should always buy the pullback just because it's you know, it's a better time to get in. You're going to get in a better amount, but it's so hard to know that the setup's going to work. Like when a setup looks good, that doesn't mean anything. You know, even if it's like perfect and the next day it breaks out, it doesn't break out because of a perfect setup. It breaks out because people keep buying. So you can't have that hindsight. So
Yeah.
It just sounds so much easier than it is. And if you don't have a good system in terms of on the day that it starts to break out, where you're recognizing that right at the start, you're never going to outperform. Like it
No.
has to be that you can start to get it down to that section.
Yeah.
Because
what Kolemagi
there's so many
says?
that break down too.
He says that this is simple but not easy. And I think that describes it very well. And also he's very humble about, like, he does nothing new. He's learned from, he just copies everyone and have found his thing that works for him. He's very clear about that, you know. But look at where it has have taken him.
Yeah. And
but the key point with Kulamagi, the more I understand about him, is how much he has worked and read. He says that he read all the newsletters from Dan Sanger, for example. I don't think you can find them anymore unless you pay for his website. But that's a lot of newsletters, I know, and he just reads everything, Kulamagi. So there's tons of work behind the performance, and also years. That's also important, I think.
Well, and we talk about the nuance of doing this and learning, and you know, there's like little nuggets of information and everything that like adds up and just makes this like more complete picture for you. So the more you do any of that stuff, like, you know, if you're someone who only does technicals, like probably the best thing you could do is buy one fundamental book just to get an idea of what those guys were looking at and doing. So you have an idea of how to stack that on top of what you're doing, or vice versa. Like, you know, me not looking into technicals for so long was a huge disadvantage I had.
Yeah, I agree. And now, Dane, I've been thinking more and more. I know I said it to you a long time ago, but to read a book about the pure short setups and shorting, to just notice them, or if you try to be long something.
Right.
I think that can be very helpful. Not
Yeah.
that I'm planning to short in the next year or something. I'm not, but just to know what to look for.
Right.
Right now, I have a basic idea, you know, but there's nuances and all that stuff to that too. But like I told you before the stream, I just want now to focus on this one setup and get that working before I move on to something else. But I have stuff in the future I want to get better at. For example, episodic pivot or whatever it's called, the EP,
Hmm.
and maybe the pullback buy at some point. But that will be in the future.
Yeah, and you know, EPs are something that I see pop up on my list anyways. So actually this happened on the stream with PL or
Yeah.
Planet Labs.
Yeah.
And that was just a good example of, you know, I haven't traded EPs, but you know, I've been watching them, and when an EP starts to form on my list of things I'm already interested in, it's, you know, now it's going to be something that like, okay, this one could possibly be an EP.
You can try it, right?
And normally on my list, I wouldn't touch something that's up, you know, over 10%. But if there's a reason it's over 10%, it kind of changes the way I'm looking at it. I'm like, oh, okay. And probably leads credence, because if it was setting up already and then on like good news or earnings or something, it does EP, you know, that showed you someone was buying right before there too.
Yeah. I got a 20% out of IRA, but which went bankrupt the week after. on a EP move. Lucky, yes, absolutely, but there was a strategy behind it, you know.
Yeah, and you know, you'll find these things overlap, and you know, this is almost like you were saying in terms of shorting. Like, you know, to get really good at parabolic shorts, like, you know, it's probably good to watch and recognize when there's like a lot of long accumulation.
Yeah.
You know, your dots on here, for instance, those dots are great to show institutional buying when a stock's moving up. But imagine you see something move up that much and you don't see institutional buying. Like that should be a huge flag that like that's gonna pull back hard, because you know, it's moving upwards, but it doesn't recognize that there's institutions doing it. It's most likely retail.
Yeah.
And you know, those fold pretty quick.
Yeah. And this is also where eventually you should start to look at the average dollar volume, and also like if things are extended. One thing I found so far in my data set is when things starts to get extended, the breakout, if it sets up and it's already a bit extended from what I look at, it very often doesn't give you a very high gain, and then it breaks down. So far from what I see, that's like one key point, together with volume on the breakout day, to make the move sustainable. It needs like around the average volume on or much higher on the breakout day. If it has much below, let's say 70 in our volume on the breakout, they just tend to be weak moves after that.
Yeah, no, and that's one of those things in hindsight you see all the time, is like one good way to call false breakouts is by the end of the day, if the volume's not really pushed high, I mean, the chance of that pulling back is high.
And that's very tricky to determine in the opening hours. So if you are in something like that, and you check for the end of the day, and you can see like, oh, this is actually far away from its average volume, I would consider sell out the entire position. But that doesn't mean that all the setups that are like that will fail, because a lot of them will work as well. It's just something I've noticed in the stuff I'm looking at.
Right. And yeah, at this point, you know, it's just honing down to just those few during the day that look like they're have decent volume. And as soon as it starts to push out from that pivot point, it's almost worth kind of taking it right there. Because that might be the only time to really get in before you catch a move. Because some of these things move quick. You know, there's so many times where a setup looks really good to me, and I'm like, wow, I can't believe this one hasn't moved. And I look back an hour later and it's up like 7%.
Yeah, it's
And I'm like,
done.
wow, right when I saw it, there must have been a ton of people saying the same thing, like this is a buy.
Yeah.
And you know,
Yeah,
the
that
earlier you are in that gap, I mean, a 7% move can make a huge difference.
oh yeah. And then I use the low of the day as stop normally, and I don't like to be over 4%. I know you have very tight now stop losses, but I'm at the point where if it goes so far up that I kind of missed it in terms of the rules of setting stop loss and stuff like that, I'm just gonna look for the next one.
Yeah, I think of it kind of like I do an EP. You know, something that's gapped up, for instance, if it's up 15%. You know, I don't necessarily want to play that right off the rip. I mean, you can buy it at open or you can do like Q's thing, but I would almost rather wait till intraday I see a setup. You know, if I'm gonna look at something, I want to see intraday it's setting up
Yeah,
and take it just like a day trader would. Like the setup looks good on the day trade.
yeah, yeah,
And if you get in there and you can hold it, and then you can, and then you're already in a swing trade move, you just had to use the day trade idea to get into it. Then once I'm into it, then I'll let everything ride, and all my rules switch over immediately to it's a swing trade. But in terms
yeah,
of getting into some of those things, especially if it's already up a decent amount, like you kind of want that pullback and that next setup to occur where it looks like there's going to be buying coming in. And if you miss it, you miss it. It's not the end
yeah,
of the world, but like you don't want to just jump in something that's up, like you're saying, because the chance of it pulling back at some point during the day, even if it continues to rise up, is super high still.
yeah. Because
So you know you don't want to get in something just get stopped out, and you know it's just all those little cuts. They all
yeah,
add up, and you know that's why at this point I'm trying to avoid all cuts. Like my my setup now is like I would rather get into only a few stocks all throughout the year that end up being a decent winner and make sure that all my losses are essentially zero.
yeah. Because that's exactly what happens with a late entry. You just increase your chance of getting stopped out tremendously. Because very maybe not very rarely, but very often I can say that the stock doesn't just go up for the day, you know.
Right.
It has some sessions throughout the day that it pulls back quite heavily and can even go into the base again. And if you were late on your entry, then you probably stopped out already, which as if you were getting a correct entry, you would still be in the stock.
Well, and part of the reason like Q uses low of the day to time his exit is because if it breaks through low of the day, it shows that there's too much, you know, selling pressure coming in and there's not enough buyers. So if you flip that rule around, if you don't purchase until it pulls back, gets close to low of the day, and then bounces off of it, that's another good time to enter because right there is where if people are buying, they don't want it to go below that amount. So they start to buy right there again, or you just have enough people buying at that low of the day because you know, it's the next time you get in. So
Yeah,
you can use that. And then you get in super close to the low of the day every time you buy.
yeah,
And yes, you're going to miss names because you do that, but that's like the trade-off is, you know, your success rate should be much better because, you know, you're getting in super close to the low of the day, which essentially is the stop point for most people.
and
So
it
if you do end up buying right there, you're getting in at almost a perfect spot on any day that you can imagine because you're using that as your entrance point, not as a point to stop yourself out.
yeah, I think it does of course matter if you miss opportunities. That's not good, and it doesn't feel good also, especially if you had it on a list and like you said, you're gone because you're busy for 30 minutes even, and the stock runs away from you. That doesn't feel good, but there every day we have one stock that we are interested in on the lists, right? Almost, at least. Of course, you found some days in February, March, maybe this year that unless you were doing short, you were not so interested in that time period. But very often, you will always find another one that you can focus on the next day. So it's not the end of the world either to miss uh, one or two, you know. But I missed so many this year. Looking back, also can't believe that I didn't have them on my radar. Um, and I know that it doesn't feel good, but at the same time, here we are now with a pretty big daily watch lists, you know. They
Yeah,
will
well,
always come. Sorry?
no, I'm just saying my bigger point being too is like, yeah, I know it does suck to miss them, but it sucks to lose money. That sucks way worse.
Yeah.
So I don't really care if I'm missing, if I end up missing 80% of the moves that I normally would be trying to take, but I get stopped on very, very few, or at least if I do get stopped, it's for a small or a minimal loss. I would much rather have that as my approach than
Yeah.
I'm taking more names, I'm getting stopped out, I'm getting slowly hit, and then you do catch winners, but the problem is the winners are always being averaged against a lot of losers.
Yeah.
My goal now is to just honestly keep the losses like literally to zero as much as possible. That should be your bare minimum goal, is do not lose money.
Yeah.
And I would rather go into something 10 times and basically have my stop at, break even every time, because all it takes is one of those times to work. And if my break even point is constantly almost where I got in, you can go in a bunch of times on something and it doesn't have to have a big move, because we're talking about these setups and how they work. And there's so many times that like the day before it breaks out or 2 days before it breaks out, it looks like it's breaking out, and it's one of those candles that has like a high wick on it.
Like
And
this one.
the day of, it looked great. Yes.
Yeah.
And it happens. It's not the end of the world. You can't predict these things on when the liquidity dries up and all of a sudden the buying pressure just pops it out. But every time you're getting into one of those names, if you get in and you set your stop, or whether it's mentally or actually, mechanically put in, yeah, sure, it's going to suck because a lot of times you get stopped out, but who cares? Because if you get stopped out a bunch of times, as long as it's not at a huge loss, it doesn't matter.
No. And I saw, it's funny actually, because I read yesterday before I went to sleep, there was some people, traders that I follow on X, that were talking about for 2026, their goal is to do less trading.
Yeah,
And
and I hear
that
that
just
from a lot
means
of
like,
people. And
sorry?
I hear that from a lot of people, and I assume most of them are like day traders. But yeah, I mean, you don't want to just take everything because like you have that FOMO idea,
Yeah, no, but it was also about, because these are good traders, they've done well in the championship and all that stuff, but still, they don't feel that they have discipline enough to let things just go, because there's something there they don't like, but there's also a lot of things they do like. Okay, then you probably shouldn't take it, because if you, the point they were making, at least, which makes sense to me, is that if you do that and you still hit on the few that you do take, your hit rate will be through the roof eventually, and that's a perfect scenario, of course, but it does have, it does make sense.
No, and I think that's just human behavior. As you see trades set up and like you're like, oh, this one looks so good, like it's gonna break out because it looks so good, and then it doesn't, and it's like you can have 5-star setups that just don't work. It happens, and usually all it just means is your timing's wrong. It's gonna break out at some point. Sometimes a setup looks really good, it breaks down, takes another 2 months before it sets up again, and then has that huge move. So sometimes it just takes time, and the problem is, if you're not a long-term investor and you're just looking at stuff for trades, your goal is to catch things right as the trade works. And that's the edge that an investor has. Is an investor, for instance, could take something that looks great and hold it through that, that little trim down and that where it pulls back up. If I was investing nowadays, like let's say, I already had a ton of capital, and this would be my goal maybe in the long run. If you get to a ton of capital, as you take a position too, you're going to take it on the setup, but you can't just get in and out of these things. So you would take it on the setup, and even if the setup breaks down, hopefully you would like the fundamentals of the story. You would watch it start to form the next base. And as long as it works out of that base, you're going to eventually make money on that investment. If the base broke down, well, then you should just take your loss and get out there, because you don't want to hold through multiple drops.
Yeah.
But I think that'd be the way I would try and be more of a long-term. I guess that's more of like a position trade as opposed to technically investing. But that kind of gets lines blurred, because when does something become an investment? After a year, after 5 years, 2 years, whatever you want to call it, doesn't matter. But you're just a longer-term holder.
Just say that you are you're dealing with stocks.
Yeah.
That's
You know, and even Buffett, who loves to preach, you know, you hold something for forever. Well, yeah, in a perfect world, you would love to hold a company that keeps going up forever and pumping out dividends to you. But you know, him when he had to hold Coke and Coke was going down, and he's like, yeah, I just couldn't get out. There's nothing I could do. Like, you know, that's just a huge inconvenience for his size. But once again, he believed in Coke in terms of like it's just this long-term product that's not going anywhere. And he was right. He was right to think that and be able to hold through something like that. But that doesn't mean that's the way he wanted to play it. He would have loved to play it, take the money out, wait for the stock to kind of, you know, get back to some reasonable valuation, and then get back in with a large position again. I mean, ideally, that's what he would do. But you just can't do that at a certain size. And, you know, I think even as like the importance of knowing something like that is it gives you an idea of, as a trader, when something starts to break down, that's why your goal is to get out right away. Because think if you're an institution, you know how many institutions are quarterly? If something starts to break down, you think they want to hold their position? No, they want to get out just as bad because they need to show numbers for their clients. So that's why typically when you see a breakdown fail and it hits a base and then that base fails, that should be like last resort to stay into something, because at that point, the institutions are going to get out.
Yeah, you're going to be alone. Like the entire thing is to align yourself with the institutions, right? Really, that's what we call momentum. Like those are the ones who move the share price. Yes. So if you see signs that it break, and how often do we see that something finds support on the simple on the SMAs, you know? When it starts to break down, then get out. That's why you have these trailing stop rules and stuff like that, because it matters. That's also something I track now when I do my project. I track the return on if you sell after 3 to 5 days, and then if you use the 10-day, 20-day, and 50-day. So I track all the performance on the different moving averages just to see if there's some sign that you should take one over the other. But so far, it's like the clear winners are the 10 and 20-day.
Right.
Which we kind of knew from before, right? I just wanted to include it.
But yeah, so
and especially on faster moving stock, which we operate a lot in, you should probably use the 10-day.
But you have
I have one here, Dane. CSIQ. Have you seen this one? It's a solar.
Yeah, no, I talked about this multiple times.
Okay, I was actually in it here and had a nice gain, and I got stopped out here. And then I decided I looked at it again, and I was thinking like, oh, you took this one too early because it's still building the base. And this kind of have that 3 waves of selling. Like you get wave number 1 here, maybe wave number 2 is this entire thing, and then up again, and maybe now is the 3rd wave, and then it can break out somewhere, you know, somewhere here, and go up, hopefully. That's what I'm waiting for on this one.
Yeah, no, I mean,
it's a high ADR stock. Sorry?
No, I'm just saying, yeah, the chart looks great. I think it just needs a little more time.
Yeah, a little more time, and I have this at 962 in ADR, so it's a big mover as well. And if you see here, Dane, the ants are showing up in the move up towards the base, you know. So again, a good sign. There has been some heavy selling after the report, and I mean it did have earnings here, which was positive, and the stock pulled back a little bit. I don't know. How do you interpret that stuff, Dane?
Yeah, but even as like you have those 3 days of selling after that, and then you have that really strong buy day, where it kind of pushed it before it actually broke down. It just goes to show you there is a lot of pressure still coming into it to buy it. And the fact now that, you know, once it dips down to a certain point, there just kind of continues to be that buying coming in. you know, if you just think of it like looking at that first move, that's the pull of the flag there. I mean, halfway up the flag, that's where you assume kind of like the regular amount of volume that came into it is. Those guys don't want that stock price to go down. So if they're going to keep buying, they're going to buy it right as you see that base working its way up.
Yeah. And if you see in the base now, you got the heavy selling straight after report here, which sent it down. And then the next wave, you have 3 candles here in a row that sent the share price down, but on less and less volume. And then maybe now is the last one, which on this day here, the 23rd of December, you have some volume coming in again on the sell side. But now on Friday, again, it's hard to interpret, but there's almost no volume on a red day. So if you get a bit more selling days here and you show that the candles are getting tight and there's no volume, I can't wait for this to break out. Because this has a lot of things that I'm looking at.
Yeah, it's on my list.
And the solar group are doing pretty well recently, I think.
Yeah, I haven't actually looked into the sector, but I do feel like the names have been popping up here and there. So
I have on the last, let me check if this is correct. They reported 1.5 almost billion in revenue, and it's a 1.6 market cap in billion, 1.6 billion. So strong revenue.
yeah, and I don't know the political side of it in Canada. You know, I know in the States, a lot of it has to do with that because it's how much money kind of gets funneled into some of these things. Because the solar companies, at least in the States, you know, previously some of the more green, pro, like liberal administrations, you know, usually put quite a bit of money aside for solar. Where, you know, it seems like the more Republican side doesn't seem to push so much for it just because they have, you know, the more traditional energy uses. So it's always a macro type thing that I try to keep in mind when I'm looking at these. But I'd rather go with the chart than I would anything like that.
Yeah. I have this is not the entire group, but I picked some of the stocks in solar. And just historically in like this year, I found it a bit hard to get into a few of these, especially in the second half of the year. I'm aware that I missed some moves, but they are a bit choppy, some of these, and when they set up, sometimes they break down instead of breaking out. So it has been a bit hard to get into some of these so far, but right now I think CSIQ is the one that looks best in terms of what I'm looking for with a high ADR stock and all that stuff as well.
Yeah. Well, and like you said too, I mean, this one's Canadian, so there's a difference there.
Yeah.
So. But I was saying I do got to get going. I know it's kind of a short stream, but
yeah, I think 1.5 hours soon, so it's okay.
Yeah, I guess that's true. It's not that bad.
I think we didn't go through all the ticks on the list here, but they are very similar actually, and it's just like there are things setting up now. A few things are a bit extended in terms of what I look for, but I really am excited to track these, especially on that has a weekly good setup, you know, which has built a little bit of a longer base. But let's see. This past week was a bit weird, so hopefully this it's not even a full week, right? Just a few days. And then January, hopefully we can start January well and you know, kick off well in 2026.
Right. Yeah, and so the only other thing I'd like to bring up too is, so now that we're showing our list and stuff, guys, if you are tuning in, you know, we don't need to always go over the same like ideas. Like we've been talking about like these charts now and stuff, and like that's kind of our ideas. So I think going forward in the stream, what I'd like to do is start getting more into like the nitty gritty with these kind of things. Going into fundamentals and that kind of stuff, just because, I can sit here and show you a triangle wedge pattern on thousands of charts over and over again, but that doesn't really mean jack shit. Like, what if you see it or don't see it, like, you got to just either do your own charts, or you have to, go back and watch a few of our streams in a row. Cause for probably the past 4 or 5 streams, we've been talking about these patterns and like how we're seeing them. And,
not only that,
seeing it, hopefully you guys have been able to watch along and get that as well. So I would like for people to start adding into the conversation, their thoughts on some of these names and what their lists are, so we can all kind of go through and just kind of be critical of one another and hopefully all become better, traders or investors from all of that.
Yeah, totally agree. And yeah, it gets a bit repetitive to just go through the setups. And then, of course, when you and I do stuff during the week, there's a lot of things that we look for that it's hard to show on the stream because the intraday is over, But we've been trying to brainstorm a little bit on how we can mix things up a little bit. So, yeah. Also, if you have any ideas, that would we will take everything into consideration. But also, it's like, if we show the listing and we talk about what we look for and stuff like that, you and I, we have different layouts and different indicators and different setups within the platform that we use. Just that alone is something that we have worked out by researching things and watching other traders and stuff like that to personalize our own strategy, So watching our list and the things I look at, for example, with all the colors here now and all that, the dots and everything. I know you don't have it on yours. You look for kind of the same stuff, but in different ways. So it needs to mean something to you. That was a long way to say that, but because to copy all of these, just pure off this and look at the flag, there's not so much value there. I think there's a lot of other things.
Yeah, and you'll build it out, like whatever your process is. I mean, there's so many options of things you can use, and you'll figure out a way to make it work for you. That's the most important part either way.
Yeah. Yeah, good. Next weekend then, I guess.
All right, so I need to make 1% next week, and the S&P needs to be down a little bit. All right, and then that way I'll have outperformed it.
We by the way, we just checked before the stream some of the US Championship investing results, and both of us were a bit surprised that the amazing results, of course, but I just thought that the top lists were all right, above 30%, but it has been a tricky year for a lot of different setups and styles. So I don't know if this is every year, but some of the results was like from even 10% and below, and there's a ton of factors coming in, but I was a bit surprised that they made the top lists. So Dane, you I think you would be placed somewhere in the middle on some of these lists if you had participated for the year.
I could have made the list.
Yeah. I couldn't. I did. I need to improve for 2026. That's for sure.
Yeah, well, like you said too, it's your first year of switching to this style, and you had all the brokerage issues and stuff too. Like I'm not dealing with any of that now.
But I made a lot. Like I quickly realized that this is going to take some time for me to interpret everything and get a system going. And if the traders we learn from, Dane, they spent years doing this before they became successful. And then you see some traders now, they catch on really quickly and become good at it straight away. But then the trick will be to be consistent on good performances as well. So there's heaps of things. I'm not going to rush anything, and this was a learning year for me. I'm going to have more of those. Instead of excuses, I think it's like I'm going to be as honest as I can to look back at what I have sucked on and try to just improve, which I feel like I'm doing, and I feel like I started to swing trade a little bit in December last year. That was my first few swing trades, and the stuff I did then was so stupid compared to where I am now. So I think I've been evolving a lot, even if my performance has disappeared a bit.
Yeah, and that's, I mean, you got to make the mistakes to learn. It's everybody says, that your your initial losses in the stock market are your tuition costs.
Yeah,
So,
yeah, exactly. Yeah,
and I've been fortunate that, I've had some good years that have kind of kept this account up for me. So I haven't, I'm down, way down from my all-time highs in this account, um, but I've shifted ideas, and the problem is my initial way I was doing this wasn't sustainable. I would have blown up my account had I kept continuing to do it that way.
yeah.
So
But that
it's
is a
good
thing
to
I
learn.
want to say though. None of us has blown up an account.
I have not blown up my account to the point I can't trade. I've never
Yeah,
lost it all. So
but you
I at
hear,
least have that going, but
yeah,
I've
but you
lost a
hear
good amount at
traders
times.
do that,
So it is what it is.
Yeah. So I think the downside is something we both have managed to plot down in our strategies.
Right.
Downside protection and risk management.
All right. Well, everybody, hope you have a great New Year's.
Yeah.
Are you going to be on next weekend?
Yeah, I think I can.
Yeah, I think I should be able to. I don't see
Yeah.
anything coming up. So, yeah, hopefully some stuff moves this week. We'll see what the markets do to the end of the year. And then by the end of the week, we'll be in the new year. So we'll see where
We're
next
gonna
year takes us. Every year's a interesting guess.
We're gonna take off.
Yeah, I really am hoping this next year is a strong year for me. I feel like I have all my ducks aligned. So I'm just trying not to be too optimistic, because every time I think I have something down, I get kicked.
Yeah,
And
true.
realize I'm like, nah, that it sounded good on paper, but in reality, it's not going to work quite like I'd hoped.
Yeah, that's
So,
part of the process.
yeah,
But I mean,
and like you said too, it gives me a lot of faith that some of these guys are like, yeah, it pretty much took me 8 years of getting my ass beat
Yeah.
before I finally figured it out. So
Yeah.
I have a few more years in me before I'll consider throwing the towel in.
It's a how do you say this? That it's not enough said. I think it's not emphasized enough, that point that a lot of these traders they took a lot of years, and that's how it. If you just imagine how long it takes you to master a skill in outside of trading or stocks or the markets or anything, it will take you years. The same applies here. And some people will do it faster than me, probably. But I'm just gonna stick with it till I know that I've done my very best. And if it still fails, I can say that I did my best.
Yeah. No,
Yeah.
I mean, at this point, I'm in for the long haul. I could care less.
Yeah,
I'm going to keep working at it till I get it. I will.
Yeah.
I will get it. That's
For sure.
It's not that I'm working on it. It's I'll get there.
Yeah.
No matter what. That's my approach. I can't.
Yeah.
Even if I fail to the day I die, I would still be thinking I'm just not there yet.
Yeah, true.
So, it is what it is.
You just run out of time.
Right.
Yeah. But don't worry, Dane. We are in XTKG here, so we're gonna be good.
Yep. It's parabolically up tomorrow. We'll be back to $2 in no time.
Yeah. All right. I see you then.
All right. See you, everybody.
Bye bye.